Bitcoin broke to the downside and is right now finding support here at this major level at the bottom of the bear flag, which is of course at around about $60,000. We're going to discuss the ETF flows and the major losses that ETF investors are having right now, discuss STRC and how it actually went down much below $100. We're going to discuss the time in the market where we are, and this is the time when we will most likely always see the bottom in the market. Without further ado, let's go into Bitcoin. Bitcoin right now, of course, broke down as predicted and got rejected from our 200 daily moving average line, which has acted as perfect resistance right exactly here. We went down all the way, we tested the bottom of the bear flag pattern and then went down eventually further in a nice straight line all the way to the bottom here at $60,000. This previous line has of course acted always as resistance in a bear flag pattern, the 200 daily moving average line, and this is basically the first major resistance in the bear market, and we go down from there, and we can see here also major resistance going down from there. Okay, next thing to talk about is if we go for Bitcoin here actually into the weekly chart, I can show you guys a few nice things which I found. So first of all, I want to just highlight that I want to highlight the Fibonacci line for you guys. So if we go from the bottom here, so this is the bottom at around about 15,000, and we go all the way to the top, we can see the Fibonacci golden pocket is approximately between $57,000 and $58,000 to $54,000. And this is also in line with kind of this area of previous, support for the previous consolidation area. And the Fibonacci golden pocket is mathematically usually an area which tends to be acting as, a target. And this target aligns also very nicely with this support area, as I just mentioned, and could be our bottom area for this bear market, hypothetically, potentially. We don't know exactly the numbers, but just as nice to look at it. Of course, we're in a bear market. Look at this. We had this line was previous support, and now has acted as perfect resistance along with the 200 daily moving average line. Next thing to talk about is these lines. And these lines are the weekly average lines. So we have the 200 weekly average line, and then we have I believe this is the 300, and we have the 350 weekly average line. And historically, we always have a Bitcoin bottom between these lines. So right now, we just bounced on the 200 weekly moving average line. Historically, we went down all the way. The last cycle, we went all the way to the 350 and found a bottom there. The cycle before that, the cycle before that, here we go. We actually first went to the 200, and then we had the COVID crash during the bull market, and that brought us to the 300 weekly moving average line. Last time, of course, to the 350, and therefore I believe this time we'll also find a bottom somewhere in between these lines, which is between $61,000 for the 200 weekly, and then we have $47,000 for the 350 weekly. And I believe we're going to find a bottom somewhere there. Now, the next thing to talk about, and before I do that, because I think we're going to go a bit further down, and I was mentioned, thankfully, and thank you for mentioning this in the comments, we have some nice areas of resistance actually on the previous all-time highs. But before I talk about this, let me discuss the other things here quickly. So Bitcoin, Ethereum, ETF holders are actually currently very much underwater. So we can see here that the average entry price for ETF purchases is approximately $83,000. And here we have the MVRV, which is telling us the approximate net unrealized loss for these positions. And we can see they are very much negative. Of course, as Bitcoin is going down, they will continue to be more and more negative. And we can also see here the most recent Bitcoin ETF flows are all negative. BlackRock is selling, and all these big institutions are selling Bitcoin in the ETF format. And people are always thinking like, what is the reason for the dump? They always want an explanation for the dump. And one potential reason is, of course, that STRC, which is the preferred stock issued by MicroStrategy, which has historically always been at $100, has now gone below $100. And this is of course because Bitcoin has dumped, people have started selling. And what is STRC? Well, it is a preferred stock, which is usually at $100, and it gives an 11.5% dividend paid out. and I believe it is a monthly. I believe they're renegotiating right now whether it should be paid monthly or not. But in any ways, 11.5% per year is what you're getting. Right now, it is very much below that. And MicroStrategy has, of course, sold, I believe, 30 Bitcoin or so also. And this was done to pay these dividends to the investors. And right now, they're not going to be able to buy any more Bitcoin because they're paying the dividends and the STRC stock is down. First of all, has to go back to 100. And there was not much buying. But Michael Saylor did mention on Twitter that it is time to add more dots on his chart, which of course means add more purchases for Bitcoin on his average DCA chart. And next thing to mention here, quickly, the time in the market where we are right now is the time where we usually find a bottom, okay? And usually historically, so we can look here at, this is the 2012 cycle, the purple line. We found a bottom here. This is the days after the halving events. And the halving events here are these dashed lines, and they happen approximately every 4 years, or more specifically whenever 210,000 blocks of Bitcoin are being mined. And that's approximately every 4 years. And we can see essentially that 2012 we had approximately here like 780 days after the halving the bottom. Then the next cycle, 2016, in the bottom we had around about 900, just before 900 days after the halving. And the last cycle, so the 2020 cycle, we had the bottom approximately here to just like above 900 days. So we are basically within 180 days of the bottom. If we look at historical bottoms, we also know that, of course, usually we find the bottom 12 months after the top, which will bring us to approximately October of this year. And now what I wanted to tell you guys before is, let's quickly look at the liquidations, and then I will tell you guys why I think we might go lower from here. So looking at the liquidations, we can see we have some liquidity here at $67,000, and we also have some at the bottom. But what's quite important, what I was doing my research and seeing, is that we should zoom out more. So I've been always showing you guys the 2 weekly chart. This is what I always show you guys, right? The 2 weekly. But let's actually zoom out a bit, and then you'll see the more important liquidation heat maps. So here on the 1 weekly, look at the $67,000 level. It is quite yellow, right? It's a strong level. But let's go to 2 weekly. This is the 2 weekly. You can barely see the 67,000. Now we have the 75,000. Is much more important. And zooming out a bit more, this is the monthly now. So this, guys, is the monthly chart. We can see that there's a big gap here between the current price to the next level of liquidity at around $80,000. So, and you can see a lot of liquidity on the bottom. Next, we're gonna go to the 3 monthly. Again, we can see there's actually now more liquidity to the bottom, and all of this liquidity right here, which was significant on the lower time frames, is not as important anymore. Here on the 1 yearly and then also on the 2 yearly, we can actually see most liquidity is still below the current price. And that is the main reason I still think we'll also continue to go to the downside. Now, let's talk about, if we go to the downside, what are the potential levels that we could be seeing a resistance from, if we now bounce a bit higher, and then we can potentially take shorts. So these are these 2 highs. We have the, first of all, the April 2021 high, and then the all-time high a few months later in November. And if I zoom in a bit here, we can basically say that these levels could act as potential resistance levels and will bring us further to the downside. So here we can see a resistance, and if we break, of course, this major level, we can continue and take a short like this. Or we go up a bit, I don't know, get a bounce from here, go down from here. We can also potentially take a short from there, and then of course this level right here, which has acted as previous support, the parallel channel, that can of course also act as resistance, and we can take shorts from there potentially. I'm personally not going to be shorting. I think this was a very good short opportunity, and personally the risks of taking shorts right now for me outweigh the benefits. I'm personally just going to be waiting until a couple of more months, then adding first of all spot positions, and then towards the end, when I'm more certain that we are at the bottom, then I'm gonna start adding leveraged long positions to my portfolio. And that's, in my opinion, what is the the right thing for me to do. Of course, everyone has their own idea, and that's why I'm just showing you guys what you could be doing. So this is, you could be taking short positions here if we get rejected from these levels. And a reason why I think we actually will go down is this. Look at this. So we have Bitcoin's price here on the top, and we have the funding rates on the bottom. And the funding rates just tell you if more people are long or short on the market. So if they're green, if they're positive, it means that most people are longing the market. They believe the price will go higher, and therefore they are paying every 8 hours, they're paying a funding fee, which is like 0.02% or so. It fluctuates every 8 hours to people who are shorting the market. Okay, right now it was actually declining, but you can see here, if I go to the 1 hourly, it went to negative, but now it has been increasing again. So people are longing right now. Of course, most people think this is the bottom, with the $60,000 level is the bottom. People are starting to long, and usually the market goes in the opposite direction of whatever most people are doing. So if I go to the daily here, I can show you guys. For example, here we had the bottom, right? And this is when people started shorting. You can see funding rates got negative, and it kind of acted as a local, a bottom signal, and we started going a bit higher from there. Also, right here, we had a bottom. People started, retail started thinking this is the end. We're gonna start shorting. Let's start shorting. Of course, people short at the very wrong moment, and then this was a bottom signal. We went higher from there, and same thing here. Kind of people started shorting when we went down. The moment to start shorting is, of course, here, but that's not when everyone is shorting. That's when we are shorting. And I was thinking, if this candle, it looked like we were going negative, right? That could be a bottom signal. We could have a bounce, but because we now had a bounce up in the funding rate, more people are longing, not shorting. I think, you know what, we could actually play out in this way, see a rejection somewhere here very closely, and then continue the down move. And finally, Ethereum, of course, lost this major support line, which was at approximately $2,000. Ethereum right now at $1,600. The bottom, it found a bottom at like $1,500 just like 1 or 2 days ago when we had the big correction. And what is the target for Ethereum in this bear market? I think it is this level here, this level which has been in 2018, 2017 has been a high, and also has been acted as support right here. So we have resistance, we have support right here, and this is the level of approximately $1,000. So I think Ethereum could find a bottom here, trade a bit, and then go back to the upside. And I would personally potentially take spot positions in later this year, in October, for Ethereum as well, at approximately $1,000. If you want, you can put limit orders down there for that. With that being said, hope you guys enjoyed the video. Thank you so much for watching. See you tomorrow, and bye.